Welcome back to the show. Thanks again for being with us this evening. We've just been discussing some great programs that Gwinnett County has in place to help folks get into homes. And joining us now on the panel is Tom O'Rourke, who is the CEO and Executive Director of NAMAR, and Ron Kacke, who is with Wells Fargo Home Mortgage, the branch in Duluth. Talk a little bit about, we're talking obviously about buying a home. It's a huge investment. I'm sure most people have to go to a lender to be able to pull this off.
Certainly.
So what are some of the things that people can do to make sure that they're getting a quality lender?
Well, I appreciate you asking the question, Rob. So here's some advice. There has always been a tendency to seek out a lender that is based solely on rate. Now, while rate is certainly an important component of the process, there are a lot of other things to consider. We should probably be advising our borrowers or buyers to seek out a lender that knows how to discuss, understand, and ask the right questions. Ultimately, we want a lender to, in turn, cater a more personalized solution that fits into their financial picture. He talks about, wealth building. Asking the right questions is paramount.
Okay. Talk a little bit about your specific office. Are there some things that you guys try to do to go above and beyond to knock the competition out, so to speak?
Yeah. So one of the things that we try to do at our office is to separate ourselves in terms of competitive advantage, in terms of our ability to cater to our customers' needs. So we actually don't refer to our staff as loan officers. We actually call them home mortgage consultants. Again, we want to make sure that our buyers feel the need, or feel that they're being represented well. So I think the struggle is that if a buyer is simply calling up an arbitrary lender and asking a rate, well, they're not getting the big picture. We need to ask probing questions. Where are they in their life? Are they a first-time home buyer? Do they have kids that might be going to college pretty soon?
Right.
So life milestones will sort of dictate the right advice, because ultimately we want to present options so that we're empowering our buyers to make the right choices.
Yeah. Now, Tom, was this one of the partnerships you were talking about earlier? You said what other vendors are going to come to the table?
You're going to have the mortgage company, which is probably the second most important part, other than actually finding a property that you're going to do. You've got home inspectors. You've got termite, the insect companies. There's a number of ones that are going to come and take a look at this, but you have to develop a relationship with your lender. I think a lot of people have just said, okay, we're going to use this mortgage company, and all they care about is what the rate is going to be. But I mean, and it's just like in the real estate industry, are you going to work with the same person in the mortgage process or not? Or are they going to give you someone else? You want to find out, make sure that you're comfortable. 68% of the reason why somebody buys a product is the person selling them the product, not the product.
Right.
So you have to be comfortable with the product, and then secondary, how are you going to feel when you talk to the lenders?
Yeah. Ron, what are some of the products that you can tell the viewers at home about? What's available for them right now?
All right. So there is still remaining a wide variety of mortgage loan products that can cater to a pretty broad spectrum of buyers in today's home market. So whether we have government loans like FHA, or loans basically sponsored or insured by the Federal Home Administration, or for military buyers, we've got VA. There's, of course, this typical Fannie Mae or Freddie Mac conventional loans. And we, of course, go all the way up to, a non-conforming, or what's more commonly referred to as jumbo product. Now, other than the standard offerings, there are also mortgage loan products that cater to a specific area. So, for instance, we have USDA, or Department of Agriculture, that is going to help buyers that are buying in more rural areas. And further, there's also a community development mortgage program that offers extremely competitive low down payment options that are targeted specific to properties. So again, partnering with the right lender will help a buyer have more informed choices.
And what can the person do, the family do, to kind of get ready for this whole entire loan process?
Rob, that's a biggie. And the reality is, lending in today's environment has changed so dramatically over the last 3 or 4 years. In years past, it was a situation where, you could secure pretty competitive financing with minimal documentation, right? The pendulum has really swung the other way. So we tell our buyers, prospective buyers, in order to qualify for a home, you want to concentrate on, there's really 3 things: credit, income, and assets. When a lender wants to review and substantiate a customer's financial profile, we have to cover those bases. So really, it's adopting a philosophy of the 3 2s, or 2-2-2. So we're going to basically analyze 2 years' worth of income. So that might be W-2s, or for perhaps a self-employed borrower, tax returns. We want the 2 most recent pay stubs to see what the year-to-date income earnings are.
Okay.
And then we also want to see the most recent 2 months worth of assets. So, bank statements, checking, savings, money markets. So again, we're trying to substantiate and review a customer's financial profile so that we have the right, we're able to make the right decision when we decide to lend.
I'm going to put you guys on the spot a little bit here.
Sure.
I want to make you look into your crystal ball. And where do you see real estate and realtor, the whole entire scene, the whole entire world going in maybe the next 12 to 18 months?
Well, I think with current homeowners, it's patience. You have lost value, we understand that. That value will return. How long will it take, we don't know. In terms of buyers, it is a buyer's market right now, especially with the interest rates. Sellers have to be willing to bend. Their home is not what it was in terms of value 3 years ago, but if you're going to stay with that home, then within the next 5, 6, 7, or 8 years, a lot of that value should come back. It's just going to be a grind as the economy is in the condition that it's in. It might be best just to stay in the home that you have if you're a seller, and it's best if you are in the mode, if you have the money to do it, to buy now, because interest rates, they always say that at some point they're probably going to start going up, but that's usually the barometer. If you can get a nice interest rate and settle on a nice price in a nice community, you're going to buy the house, and I would recommend that you do it now.
Gotcha. Ron, what do you see?
Correct. So, it's a challenge for us
Okay.
to comment, on the record as far as, well, we know rates are going to go in any particular direction. So, one thing I would probably pose to you is that, partnering with the right lender who's simply not just answering the phone and saying, well, yes, the rate is X. We want to have somebody who's educated, and somebody who knows sort of what goes into mortgage rates. There's a myth that, I'll just watch the 10-year treasuries, for instance. Mortgages don't actually follow the 10-year treasuries, they follow the mortgage bonds, which is sort of a tandem instrument.
Right.
So I don't want to get overly complex, but I think the reality is we need to make sure that we're educating our consumers that rates can pop at any time. Right now we are at historical lows. But as far as the future of lending, I will offer this. What we are seeing in certain segments of the lending industry is an expansion of guidelines, which is actually a very good sign, because if we can expand some guidelines, it brings more buyers in the market, because really from 2007, 2008, we continue to see, contraction. Oh, we can't do this, we can't do this. But, now we're starting to open up a little bit to say, okay, well, perhaps we can open up a little bit more. And so if we can expand those guidelines, a little bit at a time, make prudent choices, we can bring more buyers into the market, and that's certainly going to help stabilize the industry.
How could folks at home get in touch with you if they're interested in finding out more?
Okay, well, the obvious is to our website, wellsfargo.com. But for more specific questions about buying, particularly in this area, I'm always available on email. It's ron.kaki@wellsfargo.com. Kaki spelled just like the pants, Khaki.
And Tom, how about you?
Everything's electronic today, so it's www.namar.org, or same thing, tom@namar.org.
Yeah. All right.
Easy.
Well, gentlemen, thank you so much for being with us. We appreciate it.
Thank you.
And folks at home, thank you so much for being with us as well. We've heard some exciting things about some programs in place here in Gwinnett County to help folks get into homes right now in this tough economic time. If you'd like to learn more, please contact the Neighborhood Stabilization Program at nspgwinnett.com. And you can contact the Impact Group at theimpactgroup.org. And you can email the Homestretch Program at homestretch@gwinnettcounty.com. Thanks again for joining us. We'll see you next time.